Thank you everyone for having us. It's actually my pleasure to welcome Geeta. So Geeta is president and co-founder of Grafton Asset Management in Calgary. It's a firm that has raised and invested over $1 billion Canadian in energy projects. Geeta's here to share her perspective as an investor from the energy patch. So if you've been following headlines in Canada since the 2014 oil crash globally, they've all been pretty negative. We've seen, tens and thousands of job losses. We've had Canadian oil prices hitting record lows last November. While the rest of the world has pulled itself out in a lot of senses from this crash, a lot of the narrative has been quite negative in Calgary. So, Geeta, I just hope that you could set us up a little bit with some of what you're seeing right now in the oil patch in terms of the mood and the narrative.
Sure, it's awful. It's absolutely awful. I think we just heard on the previous panel about potential change in government. This is absolutely required. So just to put what I'm saying into context so that you understand the lens in which I view the world, Grafton has raised and deployed over $1 billion in the Canadian energy business across the capital stack of public equities, private capital, and at the asset level. We also have an entire initiative around infrastructure that supports the intermittency of renewable energy. And so the perspective that I give you is one of a Canadian investor, an Albertan investor, and somebody who is deeply connected into the energy industry. So 4 years ago, 4.5 years ago in 2014, we had all of the elements that are required for investment. We had stable rule of law, we had a stable political regime, stable fiscal regime, and a clear and transparent regulatory process. Today, we are in the danger of becoming, unfortunately, a little bit like a banana republic on the energy side. And this is real. And so I heard the view earlier from the East Coast on Ontario and Quebec. Out of Alberta, it is substantially more challenged. So in the last 4 years, besides being hit by a massive global commodity price decline, which is normal in the energy business, we have periods of intense overcapitalization, and we also have periods of intense undercapitalization. And that creates opportunity as investors, right? Because as an investor, you look for those periods of undercapitalization and deep value and discontinuities in the marketplace in order to allocate capital. But in addition to that, unfortunately, we have had significant regulatory and political challenges in our industry. We have had basically signs on our energy industry that Canada is closed for business, with carbon taxes, with bills in front of the government right now, like C-69 and C-48. That are basically putting a moratorium on large-scale infrastructure projects to be handled in a clear, concise, and transparent manner. So it is a very, very dark and bleak place. And what this has done in Alberta is it has lost us over 200,000 jobs. Let's just put that into context for a moment. The city of Calgary, the province of Alberta, has basically about 4 million people. So this is a huge amount of value. About 40% of downtown Calgary is vacant right now, just to put that into perspective. So it has been quite a challenge.
No, it wasn't always this way. I remember back when I was covering energy leading up to the oil crash, we had Chinese investors coming in, Sina coming in, the Malaysians coming in, buying up, big pockets of resources and looking to develop projects in order to export off the West Coast. We've had pipeline delays. What from your perspective needs to change in order to get that foreign interest back in the Canadian energy space?
I think we saw a huge boom up until about 2013. And that was, as you put it, the large Asian investors coming in and acquiring resource. Canada is the third largest investable oil reserves in the world. We should be a primary destination of choice for energy dollars. We have a venture capital business. We have an entrepreneurial business culture. We have venture markets that allow you to take advantage of investing at the early stage of an oil company when it's a couple thousand BOEs a day and participating in its major growth trajectory. What has happened that has hurt us is that we have been affected by political and government wins that are out of our control. So let me take a step back. As an investor, how do you think about investing? If you understand your possible fan of outcomes for your investment, if you can leverage your team's expertise, your business expertise, and your views of the world to probability weight that potential fan of outcomes, then you can price any investment into any deal. What's happened over the last 4 years with the change in government federally and previously with the previous change in government provincially in Alberta, it's now gone back to a little bit more business friendly with the recent election. What has happened is it has cast massive uncertainty over that potential fan of outcomes. And when you cannot probability weight that fan of outcomes, then therefore you cannot make investment decisions. And therefore that has caused capital flight out of Alberta and out of the Canadian energy business.
So we did have a piece of good news earlier this week for the oil patch, but I'd love you to put it into context. So for those who weren't following, the Trans Mountain pipeline project was approved. The Canadian government said they're going to move ahead with it. This is the Canadian government that now owns the pipeline because they bought it last year. It was at risk of not moving forward. We've had years of pipelines that have been proposed and not approved. Energy East is another one that was proposed and pulled away. From your perspective, how much good news is that? What hurdles do we need to overcome for that construction to actually happen?
It's a positive note for sure. This is a pipeline that should have happened. It was approved. It should have happened. It's a year delayed. It brings our energy, our oil and gas, our hydrocarbons to tidewaters. It takes our production, our transportation ability from about 300,000 barrels to about 800,000. So it's a very good step in the right direction. The problem, again, goes back, however, is if you look at all of the numbers of major infrastructure projects in Canada, like you said, not just Energy East, Line 3, Kinder Morgan, they have all stalled. And they have all stalled because of this deep, deep uncertainty that exists in our regulatory process today.
So as an investor, you have a ton of money already in the oil and gas sector. You're invested at the asset level, you're invested in individual stocks. How do you play what's going on right now? How do you find a way to make money off of all this pain?
I think Canadian energy is a deep value play. So we are at the end of the pipeline. If you believe in global supply demand economics on oil and gas, then it is a deep value play. We have great companies, entrepreneurial ones, great management teams. And I heard the conversation on ESG in the panel prior, and our ESG standards are the best in the world for energy. Canadian energy has a brand issue, not a facts issue. From a facts perspective, we have the highest environmental standards in the world. We have the highest social standards in the world. If you want to look at diversity and gender, 3 of our largest utilities in Canada are run by women. I run an energy investment firm in Canada as a woman and a minority. Oil and gas companies, the same as well. So our ESG standards are by and far better than anywhere else globally as well as in the rest of Canada, to be really blunt. So in terms of where do you invest, I think we have some really, really deep value plays. I think the broader Canadian usual suspects of resource hedge funds and resource pension funds that used to invest in Canada have retrenched. So right now, I think there was a recent study by Raymond James that showed about 0 to 30% of capital invested into Canada by institutional investors is into Suncor. Another 0 to 30% is into Canadian Natural. And the rest, 0 to about 30%, is in everybody else. And so of that everybody else, that then further splits into 2 categories of companies. One is the more growth and income oriented, which is the ARC Resources of the world, the Vermilions of the world. And then the second tier is our energy growth companies. These are companies that are either in the 20 to 50,000 BOE a day range and or are getting there and growing. And that's where I would put my money personally, is in that category.
And that's where companies like Canadian Natural Resources is putting their money, right? They're going around snapping up some of the smaller some assets, some of what we would call the entrepreneurial junior resource companies have gone bankrupt, been consolidated. What's the makeup going to look like from your perspective? Historically, we had a lot of these junior companies, and Calgary prided itself as being an entrepreneurial place where you could go discover a resource in the rocks, raise some money from an investment bank and get at it. But now we're seeing some of this consolidation. What's it going to look like in 5 years?
I think in 5 years, it's going to look better, assuming that we do have the changes that we need at the federal government level. But I think in 5 years, it is going to look better. I think, again, the Canadian energy patch is coming off an intense period of undercapitalization. And whenever you have an intense period of undercapitalization, in the words of my business partner, never waste a good crisis. And so we have started allocating more capital into also public equities in that growth category of the juniors that I'd mentioned previously. And what we do expect that to happen is there are great companies like Pipestone, Kelt, Nuvista, run by amazing entrepreneurial management teams that are going to see significant growth in their asset, in their production. They're prudently managing their balance sheets. And what's going to end up happening as the world starts righting itself a little bit on the supply-demand economics, because it has to, that rubber band has pulled a little bit too far. It is going to create a shift to those multiples for Canadian energy stocks. And we've started to see some major brand investors like Seymour Schulich come back into the energy patch in a big way just this past week.
Now, you spoke about changes you want to see at the federal level. We have a federal election coming up. There has been a lot of debate already about carbon price and about some of the legislation you talked about with regards to approvals of major resource projects. To what extent do you expect energy to be on that agenda politically as we head into this election period?
Personally, it better be on the agenda politically. Energy is approximately 10% of Canadian GDP. Let's put this into context here on facts versus fiction. Fact, the Canadian energy business is the single largest business in Canada. We're approximately 10% of GDP. Alberta as a province has funded over $600 billion in net transfer payments to the rest of the Confederation. These are huge numbers for a country like ours. When you look at what is the single most important driver of a political government, it should be drive and sustain a strong economic environment, number one, create incentives for foreign direct investment and foreign institutional investment, and provide that certainty around regulation, rule of law, and fiscal and political stability. If you do those things, you are open for business. And then it's up to business to actually provide investable opportunities for investors around the world. Number two, it is define real values of a nation and live the values of that nation. So the values of Canada have always been one of open for immigration when our neighbors to the south have not been. And so we have therefore attracted the single most efficient and excellent talent pool from all around the world with skill sets of engineers and financial people and just true needs for skills in our economy to come to our country. We recruit the best people and we give them a phenomenal environment to become new Canadians. That's a real value of Canada as a country. Second part of it, as a value that we talk about, is we talk about ESG. From a fact and fiction perspective, fact, the Canadian energy business, one of the best environmental, social, and governance businesses. It is the best worldwide from the energy sector. Number two, GHGs. Canada and their Canadian energy business produces less than 0.15% of the global emissions on GHGs. Less than 0.15. This is not even 0.2%. Are we willing to risk the unity of our country and the economic stability of our nation for basically less than 0.2 percentage point? I certainly hope not. So in my view, should the energy business be on the federal agenda? Should it be on the election agenda for Canadians nationally? Absolutely. And then number 3, on the governance and diversity side, there is what is told to the world and the brand that we build, and then there is what is reality. Unfortunately, the federal government has just recently demonstrated that what has been a verbal commentary on diversity has not been actualized. So we've all seen that in the headlines, and we don't need to talk about that in this forum. But what I can say is in the energy business, as I've said previously, diversity is driven by rising tides. So across a nation, rising tides float all boats. And Alberta 10 years ago, when I moved to Alberta, almost 9 years ago, what did I face? Trespassers will basically be recruited, was a sign that was on the doors of every single company in town. And when you have a situation where you have rising tides, when you have a situation of economic growth, that creates the single most open policy and open economic environment where all skills are valued above all else. And so therefore hiring is done for skills, not for gender, color, religion, language, country of origin. No, it's for skills. And so equal opportunity does not generate equal outcomes. That is a fundamental basis of humanity. And so the role,
if I could just pick up, if I could just pick up on the skills point, you talk about yourself moving to Alberta 9 years ago. Alberta and Calgary has been such a magnet for talent, from the East Coast in particular of Canada, and yet we're seeing these hundreds of thousands of job losses. If you look at the knock-on effect from direct jobs in the energy industry and jobs lost in industries that support them, as you look at Calgary and you look at where it needs to go, the vacant office buildings, what's the future in terms of retaining that talent and looking at potentially shifting, diversifying as the energy landscape changes?
This is clearly my favorite topic of conversation, as you guys can probably figure out. I think it's a very crucial and critical one. So to answer your specific point, where does this go? I don't know. And it really will be very dependent on our national elections in the fall. We need to have, again, stability of our political regime, stability of our fiscal regime in order for us to drive that forward. Now, there is a group of very, very smart, very capable people in Calgary who are working on this problem in the event that we're not able to bring rationality back to the discussion. And so in a situation where you do have in Canada, and in Alberta, 40% vacancy in your downtown, there is almost a view of if you build it, they will come. And so in Toronto, we have 100,000 new immigrants or new migrants into the city kind of city central every year. And so that creates, as you heard earlier, inflation in housing, in cost of living, and in a challenge in finding jobs. The one positive that we have in Alberta and in Calgary is we have already existing infrastructure and office space. We have an incredibly technically talented workforce, and we have the Canadian Rocky Mountains in our backyard. And so we are a very, very wonderful place to live. We have one of the lowest cost of living compared to Vancouver and Canada for a major city, yet we have all the benefits of a major city. And so I think if we build it, they will come. I think we're there. We've seen a couple of large non-energy related technical companies get built in Calgary. We have Benevity and we have Solium. Solium just got sold to Morgan Stanley for over $1 billion. It's not very widely aware, but it did. And so with that technical workforce that we have, the open real estate that we have, the great cost of living and advantages of living in Calgary will attract eventually more people.
And you're seeing some of those office buildings actually be turned into residential spaces. You're seeing, Calgary's always been notorious for being overbanked, for having too many investment bankers. You're seeing some of those investment bankers focus on the marijuana business, right? Raising money for pot companies. What other changes?
I hope she's not going to ask me about pot.
What other changes are you seeing in the landscape in Calgary in terms of that transition? I mean, feel free to share with us a little bit about how Grafton is changing its investment perspective to look at renewables and infrastructure.
Sure. I think everything is always from an investor perspective. It's a question about in what period of time do you think about an investment, right? Because unlike some large institutional investors who have the luxury of time and who are basically trying, like our Canadian pensions, who are trying to match long duration liabilities with long duration assets, the average investor is not looking to do that. The average investor is looking to make money in a short period of time. And so, or the medium term, or the long term, depending on how you allocate portfolios. And so if you think about the energy business, over the long period, the 20 plus years, we are already have seen the start of a major energy transition and transformation. That's real, it's happening, it's not going away. The world is transitioning as we see it and as we speak. The question is, there's always a time lag between economics and economic business and the adoption of business models at the municipal, city, and state level. And so that takes always longer time than what technology implementation has. And so over the next couple of decades, I absolutely see a transition to renewable energy. Why? Because right now, today, in the interior of North America, less than solar and wind is about 4 to 4.5 cents per kilowatt hour respectively, which is cheaper than combined cycle natural gas, period. In interior North America, combined cycle natural gas is about 5.5 to 6.5 cents per kilowatt hour. So the economics of pure generation have already hit that inflection point about 2 years ago. And in the best markets in the world, they are less than 2.5 cents and 3.5 cents respectively. The issue now is not about generation, it's about storage. And so storage technologies are where solar manufacturing capabilities and costs were a decade ago. So in the next decade, we're going to see that happening. So where Grafton has been putting a bit of our time and effort in is we've invested in a portfolio of development assets in infrastructure that supports the intermittency of renewable. So contracted, regulated assets that will give us a certainty around income over the long period, but also support the intermittency challenges of renewable infrastructure in North America. But that's the longer term. In the short to medium term, and I cannot stress this enough because I think your question was so important on should energy be part of the national agenda and the national conversation for the federal election, and it absolutely has to be. Because unfortunately, we are wasting our time as Canadians in interprovincial battles over pipelines to tidewaters. We are effectively the violinists on the Titanic. That is what we are doing. When the world is about to change, is on the precipice of a major energy transformation, where 10% of our GDP is currently hydrocarbon and fossil fuels based. Instead of thinking about how do we absolutely maximize and exploit our natural resources today in order to invest in hospitals and social infrastructure and retraining of our people and the economy of our future, we're wasting our time.
With that call to action, we're going to leave it there. Thank you so much, Geeta. Thank you, everyone.